Very good day, my dear students. If you are preparing for the CA Intermediate Taxation paper, then this video is going to be extremely useful for you. In this video, we are going to cover the facts and figures compiler. Facts and figures compiler. As you know, there is a document called as tax cruiser, and tax cruiser has two compilers. One is the interlinking compiler, which is very useful, and the other is the facts and figures compiler. This compiler will help you to quickly revise important formulae, limits, thresholds, dates, etc. So why facts and figures compilers, sir? So we need to understand that tax law is vast, and it has numerous formulae, limits, thresholds, dates, etc. And therefore, it is challenging to remember these facts and figures, and all the more difficult to recollect them correctly while solving questions in the exam. And if you are unable to do it, then what happens? Inability to do so is one of the top reasons why many students fail to clear the tax exam, because they apply an incorrect formula or a different limit or an incorrect threshold, date, etc. and ultimately their answer goes wrong. So how does facts and figures compiler help? It highlights important formulae, limits, thresholds, dates, etc. in a super compact and easy to revise format. So this ensures what? That you solve questions in the exam without any omissions and mistakes. You don't lose out on any marks. Now there are two places where this compiler is available. One is in print form and the other is in the form of an ebook. In the printed form, you will find it printed at the end of the tax book plus concepts for both income tax and the GST. In income tax book, you will find the income tax compiler, and in the GST book, you will find the GST compiler. As an ebook, it's available on my websites. You just need to go to www.taxwithsharad.com. If you are already registered, just log in and you will find the tax cruiser section there where you will find this compiler. If you are not already registered, then just sign up. It's completely free, and then you access this compiler. Ebook is completely free. Now, how to use the facts and figures compiler for maximum benefit? Read the compiler once every fortnight. Okay. Closer to the exams, increase the frequency to once a week. This is the minimum. The more you do, the better it becomes. This compiler can be read on a standalone basis. However, for best results, I will recommend that you read it along with the tax book plus concepts. Now, each reading of the compiler, so when you read it every time, it will work like a super revision for you, and various facts and figures will get ingrained in your mind. So when you solve the questions and exams, the facts and figures will easily spring to your mind and you won't make any error or omission. Now in this compiler, content is covered to the extent relevant for CA intermediate exam. And the objective is to briefly highlight the provisions. So details are not given of the provisions, only brief highlights are given. For details, you should refer to the chapter of your study material and the relevant legal provisions. So let's begin with this video. So as you can see, the facts and figures compiler is arranged as per various chapters, and we will move chapter by chapter. First, we begin with introduction. Date of launch of GST 1st July 2017. In case of interstate supply, IGST is levied. In case of intrastate supply, CGST and SGST or UTGST is levied. There are 11 special category states under the Constitution. Now we move to scope of supply. Gifts in a financial year by employer to the employee is not a supply up to rupees 50,000. Now what are related persons? So there is a list where the person is categorized or termed as a related person, and this includes persons if a third person has 25% or more shares of both of them, right? So A is there, B is there, and there is a third person C, and C holds 25% or more shares in A and 25% or more shares in B. So A and B will become related persons. Construction of a building is categorized as a supply of service unless the entire consideration is received after the earlier of issue of certificate of completion or its first occupation. Composite supply is taxable at rate which is applicable to the principal supply, and mixed supply is taxable at a rate which is applicable to supply with the highest rate. Charge of tax. Under forward charge and reverse charge, FC and RCM. In case of an author who is exercising the forward charge option, he should not withdraw the option within a period of 1 year. In case of a promoter, it is liable to pay tax under RCM in case of long-term lease of land which is for 30 years or more. Goods Transport Agency Service, GTA service. In case of RCM, the rate of tax is 5%. In case of forward charge, without ITC, it is 5%, and with ITC, it is 12%. In case of renting of passenger vehicle, the rate of tax under RCM is 5%, and under forward charge, it is 12%. Tax payable by e-commerce operator. Now, e-commerce operator is not liable to pay tax for restaurant service in a hotel where the hotel has a daily unit tariff of more than 7,500 rupees. Composition levy. What is the eligibility? The aggregate turnover in the preceding financial year should be up to the specified limit. That means should not be more than the specified limit. And what is the specified limit of ATO? For composition scheme for goods, in case of 8 out of 11 special category states, it is 75 lakh. And what are these 8 states? These 8 states are Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and Uttarakhand. And for the other states, the specified limit of ATO is 1.5 crore. In case of composition scheme for services, it is 50 lakh. Now, what is the rate of tax in case of composition scheme for goods? In case of a manufacturer, it is 1% of turnover in state or UT. In case of restaurant, it is 5% of turnover in state or UT. And for any other supplier, it is 1% of turnover in state or UT, which is taxable turnover. In case of composition scheme for services, the rate of tax is 6% of turnover in state or UT. Can one supply services under composition scheme for goods? Yes, can supply up to a higher of 10% of turnover in state or UT in the preceding financial year, or rupees 5 lakh. When does the option to avail composition scheme lapse? It lapses from the day the ATO in the current financial year exceeds the specified limit, which we just now saw some time back. What about interest or discount? Now, if the interest or discount is exempt, it is excluded while computing aggregate turnover or turnover in state or unit. How do we compute ATO, aggregate turnover? It is equal to taxable supplies plus exempt supplies plus exports plus interstate supplies. It is computed on an all India basis for the same PAN, and it excludes inward RCM supplies, right? Inward supplies which are taxable under RCM, and it also excludes GST. How do we compute turnover in state or UT? The formula is the same as that for ATO, but in case of turnover in state or UT, it captures supplies made within a state or UT or from a state or UT. And just like ATO, it excludes inward RCM supplies as well as GST. So GST is excluded. That means the value which is net of GST should be included in ATO or turnover in state or unit. And if we have the value which is inclusive of GST, then how do we compute value net of GST? So we multiply this value inclusive of GST into what? Into 100 divided by within bracket 100 plus rate of GST. Certain points regarding the procedure. What is the timeline to file intimation for opt-in under the composition scheme? If the person is not registered, then the intimation should be filed while applying for registration. And if the person is registered, the intimation for opt-in should be filed before commencement of financial year for which option is exercised. What is the effective date? What is the effective date for the option under the composition scheme? So where the person is not registered, the effective date is the date of registration, and where the person is registered, the effective date is the beginning of financial year. We now move to exemptions. What is the meaning? What is the definition? What is the scope of exempt supply? It includes nil rated supply, wholly exempt supply, as well as non-taxable supply. In case of charity, when we talk about exemptions, so education or skill development for persons of age more than 65 years in rural area is charitable activity, and therefore such services exempt. Renting of religious public place is exempt in the following cases. In case of rooms, if it is less than 1,000 per day. In case of premises, open area, etc., if it is less than 10,000 per day. In case of shops or commercial space, if it is less than 10,000 per month. Okay. In case of education, when we talk about IIMs, the programs of IIMs, if the duration is 1 year or more, then such services are exempt. In case of health, hospital room rent, when is this exempt? In case of ICU, CCU, ICCU and NICU, full exemption is provided. In case of other rooms, it is exempt when the charges are not more than 5,000 per day. Services provided by the government. Ordinary post, envelopes weighing less than 10 grams, the service is exempt. In case of these services which I mentioned 1, 2, 3, 4 and 5, these are taxable if the recipient is a business entity with ATO in the preceding financial year more than the registration threshold. And these services are postal services which are non-basic, okay, for example speed post, then aircraft, vessel related service, transport, or renting of immobile property and other services. So these are taxable if the recipient is a business entity having ATO in the preceding financial year of more than the registration threshold. Okay, if the recipient is a business entity with ATO in the preceding financial year not exceeding the registration threshold, then also the above are taxable. But number 5 is exempt. That means other services are exempt. Okay, other services are exempt in this case. Now, renting of immobile property and other services. Even if it is taxable, it is still exempt. It will still be exempt in a particular case. That is where the consideration is up to rupees 5,000, or in case of continuous supply of services up to rupees 5,000 in a financial year. In case of old age home service provided by the government, it is exempt if the residents are aged 60 years or more, and the consideration is up to 25,000 per month per member. Now we come to services which are provided to the government. Okay. In case of composite supply of goods and services which are provided to the government by way of an activity with respect to the function of panchayat or municipality, this is exempt if the value of services if the value of supply of goods is up to 25%. Training program service is exempt if 75% or more spend is borne by the government. Now let's turn our attention to transport. Vehicle with less than 4 wheels having engine cubic capacity of not more than 25 cc is not a motor vehicle. When we talk about services which are exempt in the category of transport, we refer to motor vehicle at certain places. So when we talk about the meaning or the definition of motor vehicle, this is not constituted as a motor vehicle as per its definition. Regional connectivity service RCS airport. In that case, what about viability gap funding? It is exempt for a period of 3 years from the start of the airport. Hire of motor vehicle to a straight transport undertaking is exempt when the capacity is more than 12 passengers. Hire of electrically operated vehicle to a local authority is exempt if the capacity is more than 12 passengers. Tour operator service to a foreign tourist is exempt. Okay, and the extent of exemption is lower of A or B. A is consideration for the entire tour, and that we apportion as per a ratio. So for that, what we do is we multiply this by days outside India divided by total number of days, or B 50% of total consideration. And when we talk about days, less than 12 hours is equal to half a day, and 12 hours or more is equal to 1 day. Okay. When we talk about a foreign tourist, the stay of foreign tourist in India should be a maximum of 6 months. Banking. Settlement of single card transaction is exempt if it is up to 2,000 rupees. In the case of insurance, life micro insurance is exempt if the cover is a maximum of 2 lakh rupees. In the case of immobile property, if we are talking about pure labor contract for original work with respect to a single residential unit, that is exempt. Okay. If upfront amount is there for a long-term lease, and the long-term lease is for 30 years or more of plots for financial business, that is exempt. Sports, arts, culture. Folk or classical performance by an artist is exempt if the consideration is up to 1.5 lakh rupees. What about admission to circus, dance, concert, etc.? It is exempt if the consideration is up to 500 per person. In case of non-profits, service by a housing society to its own member is exempt up to rupees 7,500 per month. Service by a welfare entity or a promotional entity to own member, in that case membership fee is exempt, which is up to 1,000 per year. In case of incubation service, service by an incubatee is exempt for 3 years, okay, up to a total turnover of 50 lakh in a financial year. If the total turnover was not more than 50 lakh in the preceding financial year. Place of supply. Now, in a case where services are provided across states or union territories, then there is a basis of apportionment which has been prescribed. Okay. And we will look at the basis of apportionment in various situations. In case of immovable property services, in case of lodging, the basis is number of nights. In case of other services, it is area of property. In case of lodging in a boat or vessel, it is the time spent. In case of an event held, it is the apportionment is as per GAAP, generally accepted accounting principles. In case of lease circuit, it is based on number of points. In case of advertising service to the government, there are certain situations. In case of publications, the basis is amount payable for editions published. In case of pamphlets, etc., it is the amount payable for distribution. In case of hoardings, not in a train, the basis is amount payable. In case of train, the basis is length of track. In case of utility bills, it is billing addresses. Railway tickets, it is number of railway stations. Radio stations, it is based on name of stations. TV channels based on viewership. Cinema halls based on amount payable. Internet and SMS based on number of subscribers. Now we come to time of supply. Time of supply for goods under forward charge. Time of supply is the earlier of A or B, date of issue of invoice by the supplier, or last date for issue of invoice by the supplier. Now, what is the last date for issue of invoice? Time limit to issue invoice for goods. Where the supply involves movement of goods, invoice should be issued latest by the date of removal of goods. That means before or at the time of removal of goods. Okay. If it is not the case above, that means where supply does not involve movement of goods, time limit to issue invoices before or at the time of delivery or making available of the goods. In case of continuous supply of goods with successive statements or payment, the time limit is before or at the time of issue of each statement or receipt of each payment. In case of goods sent or taken on approval for sale or return, it is before or at the time of earlier of supply or 6 months from the date of removal. Time of supply for goods under the RCM mechanism. It is the earliest of A, date of receipt of goods, B, date of payment, or C, 31st day from the date of issue of invoice by the supplier. Date of payment will be the earlier of entry in books of recipient or debit in the bank account. In case it is not possible to find the time of supply as per this rule, then the time of supply will be the date of entry in the books of recipient. Now, time of supply for services under forward charge. It is the earliest of date of issue of invoice by the supplier, okay, if the invoice is issued within time. Or if the invoice is not issued within time, then the date of provision of service. Or the date of receipt of payment. And this is earlier of entry in the books of supplier or credit in the bank account. If the above rule does not apply, if the above provision does not apply, then the time of supply is the date on which a recipient shows the receipt of services in books. In case of advance of up to rupees 1,000, the time of supply is the date of issue of the related invoice. Now, what is the time limit to issue invoice for services? Where the supplier is insurer, bank, FI, financial institution or NBFC, latest by 45 days from the date of supply. In case of any other supplier, latest by 30 days from the date of supply. In case of continuous supply of services, where the date of payment is ascertainable, latest by the due date of payment. Where the date of payment is not ascertainable, latest by the time of receipt of payment. In case payment is linked to the completion, then latest by the date of such completion. where the supply ceases before completion at the time when the supply ceases. For continuous supply of services, the supply should continue for more than 3 months period. Time of supply for services under RCM. It is the earlier of date of payment or 61st day from date of issue of invoice by the supplier. Date of payment is the earlier of entry in books of account or bank debit. Where it is not possible to find the time of supply as per this rule, then it is the date of entry in the books of recipient. Time of supply for import within associated enterprises. It is the earlier of date of entry in the books of recipient or the date of payment. Time of supply for supply of vouchers. If supply is identifiable at that point, okay, at the time of supply of vouchers, then the time of supply is the date of issue of vouchers. In all other cases, it is the date of redemption. Residual method. That means where the time of supply cannot be found as per the rules that we have discussed so far. Where periodical return is to be filed, it is the due date of return. And in any other case, it is the date when tax is paid. In case of addition to the value of supply, in respect of on account of interest or late fees or penalty for delayed payment, the time of supply for such addition to value of service is the date when the supplier receives such addition in value of supply. Value of supply. If the supplier and recipient are not related and the price is the sole consideration, then the value of supply is the transaction value. GST is excluded from the value of supply, but other taxes, duties, cesses, fees, charges levied under any law are included. However, tax collected at source TCS under income tax is excluded. Payment which is made by the recipient to the third party for which the supplier is liable is included. Incidental expenses, they are included. Interest, late fees or penalty for delayed payment, it is included if it is not exempt. If it is exempt, it is not included, obviously. Del creditor agent, DCA. Now where DCA has given loan to the recipient and then charged interest, what about interest? If DCS is not an agent, then interest is exempt. If DCS is an agent, then interest is included in the value of supply. Subsidy by the central government or state government, it is excluded. But if subsidy is given by others, then it is included if it is directly linked to the price. Discount. Pre-supply discount, it is excluded. But post-supply discount, it is excluded if 3 conditions are satisfied. 1. It has been agreed before. 2. It is linked to the invoice. And 3. ITC is reversed by the recipient. If it is not the case, if it is not this case, then discount is included, it is not excluded. We'll now look at ITC. Payment of tax is a condition for availment of ITC, and if the supplier does not furnish the relevant GSTR 3B till 30th of September following the end of financial year in which ITC is availed, in that case the recipient will need to reverse ITC while furnishing his GSTR 3B till, that means on or before 30th of November following end of the financial year. Okay. Payment of value of supply and tax thereon. If this is not paid to the supplier within 180 days, then ITC will need to be reversed. Time limit to avail ITC. It is the earlier of A or B, where A is 30th November following the end of financial year to which the invoice or debit note pertains. B. Furnishing of relevant annual return. A bank or financial institution has an option to avail 50% of eligible ITC every month. ITC is blocked on passenger motor vehicle with seating capacity including driver, which is up to 13. Claim of ITC in certain cases. In case the person is opting out of composition scheme or exempt supply is becoming taxable, then ITC can be claimed. Okay. In case of capital goods, ITC can be claimed after reducing tax paid by a certain extent. and that extent is 5% per quarter of a year or part thereof. And for this quarter means January to March, April to June, etc. In the above cases, okay, that means opting out of competition scheme or on exempt supply becoming taxable, and also upon taking registration, ITC cannot be taken. So there is a limitation. ITC cannot be taken for any supply after expiry of 1 year from date of issue of tax invoice. And details need to be certified by CA or CMA if the total ITC claimed is more than 2 lakh. Reversal of ITC is required in certain cases. Upon opting in to the competition scheme or supplies becoming wholly exempt, ITC is to be reversed. In case of inputs, proportionate ITC needs to be reversed based on invoices, if invoices are not available based on market price. In case of capital goods, ITC based on useful life in months, which is remaining out of 5 years, needs to be reversed. And here part of a month is to be ignored. Upon supply of capital goods or plant and machinery on which ITC was taken, the amount is to be paid, and that is the higher of A or B. A is ITC taken, and this is to be reduced by 5% per quarter or part. B is the tax on transaction value. So higher of A or B needs to be paid. However, in case of bricks, molds, dies, jigs, fixtures which is supplied as a scrap, A is to be ignored. A is to be ignored. That means what is to be paid is the tax on transaction value. In case of multiple registrations, say new registrations in the same state or UT are taken, then ITC can be transferred. And this is to be done in the ratio of value of assets. Here are the rules for utilization of ITC. ITC of IGST or CGST or SGST or UTGST and output liability. Okay. In step 1, ITC of IGST should be utilized towards payment of IGST. Thereafter, ITC of IGST should be utilized for payment of CGST or SGST or UTGST in any order and proportion. Now, ITC of CGST can be utilized only after ITC of IGST has been fully exhausted. So, ITC of IGST is required to be exhausted first. Okay, and thereafter we come to this step, where ITC of CGST can be utilized towards payment of CGST and thereafter towards payment of IGST. But it cannot be utilized towards payment of SGST or UTGST. Thereafter, ITC of SGST or UTGST can be utilized towards payment of SGST or UTGST and thereafter towards payment of IGST, but not towards payment of CGST. There is a restriction in terms of utilizing ITC under Rule 686A, as per which utilization of fraudulent or ineligible ITC is restricted, but this restriction is valid till a period of 1 year. Rule 86B also provides for a restriction, as per which maximum of 99% of output tax can be discharged by utilizing ITC. This restriction applies if the value of taxable supply, and taxable supply does not include exempt supply or zero rated supply. So this restriction applies if the value of taxable supply in a month is more than 50 lakh. This restriction is not applicable in certain cases. One case is if more than 1 lakh of income tax is paid in each of the last 2 financial years for which the return of income time limit has expired. One more case is that if the person has received more than 1 lakh of refund in the preceding financial year for unutilized ITC due to zero rated supplies or inverted duty structure. One more case is if more than 1% of cumulative output tax liability so far in the financial year is paid in cash. We now come to registration. Requirement to register. When is a person required to register? The person is required to register if ATO in a financial year is more than the registration threshold. How do we compute ATO? We have already discussed under the chapter on charge. But 2 special points here. Supplies on own account or on behalf of principals is required to be included. Exempt interest or discount which is exempt is also supposed to be included. And what is the registration threshold? If taxable supplies are from MMNT states, Manipur, Mizoram, Nagaland, Tripura, in that case, the registration threshold is 10 lakh. If taxable supplies are from AMPSTU states, meaning these are Arunachal Pradesh, Meghalaya, Puducherry, Sikkim, Telangana, and Uttarakhand, then the registration threshold is 20 lakh. And from all other states or UT, it is 20 lakh. However, it is 40 lakh in case of exclusive supply of goods. In case of interstate supply, registration is exempt for supplier of services if ATO is not more than 20 lakh in a financial year. This 20 lakh becomes 10 lakh in the case of MMNT states. Further, registration is exempt for supplier of handicraft or handmade goods if the ATO is not more than 20 lakh. This 20 lakh becomes 10 lakh in case of MMNT states. Procedure for registration. Application for registration is to be made within 30 days of becoming liable. Under Rule 10A, now bank account details are to be furnished at the time of applying for registration. If not so furnished, then under Rule 10A, these need to be furnished by the earlier of A or B. A is 30 days from the grant of registration. B is furnishing of GSTR1 or using IFF. What is the effective date of registration? Where application is submitted within 30 days of becoming liable for registration. Date when the person became so liable. Where application is submitted after 30 days of becoming liable. Date of grant of registration. This is the effective date of registration. In the case of casual taxable person or non-resident taxable person, such person needs to apply for registration at least 5 days prior to the commencement of business. And the maximum validity of registration certificate is 90 days, and this can be extended up to a maximum of further 90 days. Cancellation of registration by proper officer. There are certain circumstances. Few of them are where GSTR 4, the return for composition taxpayer, is not filed beyond 3 months from the due date, or where monthly GSTR 3B is not filed for continuous period of 6 months, or where quarterly GSTR 3B is not filed for continuous period of 2 tax periods, or where business is not commenced within 6 months from voluntary registration. Revocation of cancellation. For that, one needs to apply within 90 days from service of order of cancellation. This 90 days can be extended, but the maximum days of extension is 180 days. If the registration has been cancelled for not filing of returns, then one needs to file returns within 30 days of the date of revocation order. Documents. Tax invoice. Certain information that a tax invoice should contain. If recipient is unregistered and the value of taxable supply is 50,000 or more, then name, address, state and its code needs to be mentioned in the tax invoice. If the recipient is unregistered and value of taxable supply is less than 50,000, then above, this needs to be mentioned if the recipient requests. 6 digits of HSN. 6 digits of HSN needs to be mentioned if the annual turnover is more than 5 crore in the preceding financial year. However, 4 digits of HSN need to be mentioned if the annual turnover is up to 5 crore in the preceding year, and this is optional if the recipient is unregistered. How many copies of tax invoice are required? In case of goods, 3. In case of services, 2. E-invoicing provisions. Registered person is covered under e-invoicing provisions whose ATO in any preceding financial year 2017-18 onwards is more than 5 crore. Dynamic QR code provisions. Registered person is covered by dynamic QR code provisions whose ATO in any preceding financial year 2017-18 onwards is more than 500 crore. Revised tax invoice. For which period can revised tax invoice be issued? For the period from effective date of registration to the date of issue of registration certificate. And one can issue revised tax invoices within 1 month from the date of issue of registration certificate. Consolidated invoice can be issued for state-wise unregistered recipients of interstate supplies if the value of supply of a supply is up to 2.5 lakh. If the value of supply is less than 200 rupees, then a consolidated tax invoice can be issued daily. So, consolidated tax invoice can be issued daily if the value of supply is less than 200 and the recipient is unregistered, who doesn't need invoice. In case of receipt of advance, receipt voucher is issued. In such cases, if the rate is indeterminable, then it is paid at the rate of 18%. If the nature of supply is indeterminable, then it is treated as interstate supply. And GST is required to be paid. In the case of an insurer, bank, financial institution or NBFC, they can issue consolidated tax invoice at the end of month. Delivery challan, it should be prepared in 3 copies. Credit or debit note. As far as credit note is concerned, details can be declared in the return for the month in which credit note is issued. And this should not be later than the earlier of A or B. A is 30th November following the end of financial year of supply. B is date the relevant annual return is furnished. As far as debit note is concerned, details should be declared in the return for the month in which debit note is issued. And for this, there is no time limit. E-way bill. When is it required? It is required to be generated for movement of goods if consignment value is more than 50,000. What is consignment value? It is value declared in the invoice, bill of supply or delivery challan. While computing consignment value, GST is included, but value of exempt supply is excluded. When part A is furnished, a unique number is generated and this is valid for a period of 15 days. As far as part B is concerned, there is no need to furnish it. If the goods are transported for up to 50 kilometers within the state or union territory, from consignor's place to transporter's place, or from transporter's place to consignee's place. If consignments are transported in one vehicle, then consolidated e-way bill can be generated for those consignments. If there is interstate supply and if e-way bill has not been generated, but the aggregate consignment value is more than 50,000, then the transporter should generate e-way bill for such consignments. Validity of e-way bill. It is 1 day for up to 200 kilometers plus 1 additional day for further 200 kilometers or part. However, in the case of ODC MMS, in the case of over-dimensional cargo or multimodal shipment with at least 1 leg by ship, it is 1 day and 20 kilometers. That means 1 day for up to 20 kilometers plus 1 additional day for further 20 kilometers apart. A transporter can extend the validity of e-way bill within 8 hours from its expiry. E-way bill needs to be accepted and it should be accepted or rejected by the earlier of A or B. A is 72 hours of details made available and B is the time of delivery of goods. E-way bill is exempt in certain cases and these are listed and 2 of them are given here. If goods are transported for up to 20 kilometers from consignor's place to the weighbridge or back with delivery challan, e-way bill is not required to be generated if consignment value does not exceed 50,000 rupees. Generation of e-way bill is blocked. It cannot be done for outward movement of goods of a person. If GST CMP 08 is not filed for 2 quarters consecutive, GST CMP 08, statement of self-assessed tax in case of a composition taxpayer, or where GSTR 3B is not filed for 2 tax periods consecutive, or where GSTR 1 is not filed for any 2 months or quarter. We now come to accounts and records. What is the period of retention? There is a standard or default period which is 6 years from the due date of furnishing annual return for the relevant year. There is a special provision in case of appeal, revision, etc., where the period of retention is later of 1 year after final disposal of appeal, etc., or B standard period which is given above. Payment of tax. In case of cash ledger, deposit in cash ledger can be made over the counter of up to rupees 10,000 per challan per tax period. Under section 50, interest is leviable on delay in payment of tax. And there are 2 situations where supplies are declared in the return furnished after the due date, except in case of demand, then interest is at the rate of 18% per annum on tax paid from cash ledger, not by utilizing ITC, for the period of delay in filing return. And all other cases, it is 18% per annum on unpaid tax for the period of delay in payment of tax. Rounding off, any amount payable or refundable is rounded off to the nearest root. TDS and TCS. Tax deduction at source, TDS. Who is supposed to deduct? There is a list of deductors, and one item in the list is authority, board or body statutory or established by the government with 51% or more equity or control. Such authority, board or body is a deductor. For TDS, what should be the value of supply? The value of supply of taxable goods or services under a contract should be more than 2.5 lakh. And when we compute value of supply, GST is required to be excluded. The rate of TDS is, in the case of intrastate supply, CGST and SGST at 1% each. In case of interstate supply, IGST at 2%. TDS is to be paid by 10th of next month. Tax collection at source, TCS. The rate of TCS in the case of intrastate supply is CGST and SGST at 0.5% each. In case of interstate supply, IGST at 1%. TCS is on the net value of taxable supplies monthly, and that is the value of taxable supplies minus returns. TCS is to be paid by 10th of next month. Now we will finally talk about returns. GSTR1 statement, statement of outward supplies. What is the due date to file? In case of monthly GSTR1, it is 11th of month succeeding the tax period. In case of quarterly GSTR1, it is 13th of month succeeding tax period. Invoice furnishing facility, IFF. Now under this, details can be furnished for first and second months of a quarter. Details can be furnished up to a cumulative value of 50 lakh in each month. Details can be furnished during the 1st to 13th of the succeeding month. What is the maximum time to furnish GSTR1 statement? It cannot be furnished after the expiry of 3 years from the due date. Certain details are required to be given in GSTR1. In case of interstate supply to unregistered persons, consolidated details of state-wise supplies for each rate is to be given. Okay, consolidated details of state-wise supplies for each rate is to be given if invoice value is up to 2.5 lakh. If invoice value is more than 2.5 lakh, then invoice-wise details need to be given. As far as HSN codes are concerned, how they are to be given is the same as we discussed in the case of a tax invoice when we were talking about the chapter on documents. GSTR1 amendment. It is not allowed after the earlier of 30th November following the end of financial year to which details pertain or furnishing of relevant annual return. There is a time limit for amendment. Now GSTR2B statement, that is the auto-generated ITC statement. What does it consist of? Okay, it consists of GSTR1 details which have been furnished by the supplier. For supplies from non-QRMP suppliers, that means monthly GSTR1 cases. GSTR2B, what does it contain? It contains GSTR1 details furnished between 0000 hours of 12th of the relevant month to 23:59 hours of 11th of succeeding month. In case of supplies from QRMP suppliers, quarterly GSTR1, it consists of GSTR1 or IFF details furnished between, and it depends on first month of quarter, second month of quarter, third month of quarter. So for first month of quarter, GSTR1 details or IFF details furnished between 0000 hours of 14th to 23:59 hours of 13th of succeeding month. For second month of the quarter, this date range remains the same. And for third month of the quarter also, this date range remains the same. Okay. When is GSTR 2B made available? It is made available on 14th. QRMP and GSTR 3B return. QRMP scheme. When is the person eligible? The person is eligible if ATO in preceding financial year is not more than 5 crore, up to 5 crore. Exercise of option under this scheme. It can be done from first day of second month of preceding quarter till the last day of first month of the quarter for which the option is exercised. If the ATO exceeds 5 crore in the current financial year, then the person needs to opt out from this scheme from the first month of the succeeding quarter. An opt-out facility is also available, and the opt-out can be done from the first day of the second month of the preceding quarter till the last day of first month of the quarter. Basically same as this. GSTR 3B due date. In case of monthly GSTR 3B, it is 20th of the month succeeding the relevant month. In case of quarterly GSTR 3B, it is 22nd or 24th of the month succeeding the relevant quarter. 22nd for certain states UTs and 24th for certain states UTs. Now we come to composition taxpayer. GST CMP 08, this is the statement of payment of self-assessed tax. This needs to be furnished quarterly by 18th of month succeeding the quarter. GSTR 4 is the return, needs to be furnished by 30th of April following the end of financial year. Now statements or returns which are required to be furnished before opting in the composition scheme. These needs to be furnished till the earlier of A or B. A is due date of September return of the succeeding financial year. B is furnishing of annual return of preceding financial year. Non-resident taxable person, NRTP. GSTR 5 return. What is the due date? It needs to be furnished monthly by the earlier of 13 days after the end of a calendar month or 7 days after the last date of the registration validity period. TDS return, GSTR 7. It needs to be furnished monthly within 10 days after the end of the relevant month. What are the due dates for payment of tax? In case of a person filing monthly GSTR 3B, it is GSTR 3B due date. For person filing quarterly GSTR 3B, quarterly GSTR 3B. For the first 2 months and for the third month. For the first 2 months, the due date for payment of tax is 25th of succeeding month, and for the third month, it is the same as the GSTR 3B due date. In case of corporation taxpayer, it is the GST CMP 08 due date. For NRTP, it is the GSTR 5 due date. And for payment of TDS, it is GSTR 7 due date. What is the amount which needs to be paid for QRMP taxpayers who are filing quarterly GSTR 3B? So they need to pay an amount for the first 2 months of a quarter and then for the third month of the quarter. For the first 2 months of the quarter, they can adopt method 1 or method 2. Method 1 is the fixed sum method, as per which it is the amount to be paid is 35% of tax paid in cash in the preceding quarter if the return was filed quarterly. And if the return was filed monthly, then it is 100% of tax paid in cash in the last month of the preceding quarter. If method 2 is adopted, which is self-assessment method, then the amount to be paid needs to be computed normally. For the third month, that means the last month of the quarter, amount is to be paid as per GSTR 3B after adjusting deposit in the first 2 months. Some common points for GSTR 3B return or GSTR 4 return, competition taxpayer or GSTR 5 return, NRTP or GSTR 7 return for TDS. Rectification is possible, but it is not allowed after the earlier of 30th November following the end of financial year or the actual date of furnishing of relevant annual return. Maximum time for GSTR 3B 457. It cannot be furnished after the expiry of 3 years from the due date. There are certain special returns. TCS statement. It needs to be filed monthly in GSTR 8 within 10 days of next month, and it cannot be furnished after the expiry of 3 years from the due date. Rectification is possible, but it is not allowed after the earlier of 30th November following the end of financial year or the actual date of furnishing of relevant GSTR 9B, okay, which is the annual statement. Annual GSTR 9B statement needs to be filed by 31st of December following the end of relevant financial year. Now we come to annual return. It needs to be filed in GSTR 9A by composition taxpayers and GSTR 9 by others by 31st of December following the end of relevant financial year. One also needs to file self-certified reconciliation statement in GSTR 9C if ATO during the financial year, relevant financial year, is more than 5 crore. Annual return cannot be furnished after the expiry of 3 years from the due date. Final return. Final return in GSTR 10 can be filed within later of 3 months of date of cancellation of registration or date of order of cancellation of registration. Now we come to late fees. Late fees for failure to file certain returns and statements is applicable, and the amounts of late fee that you can see in this table is the late fee for every day during which the failure continues, and the maximum is what is given in the brackets. And the amounts which are given here, as you can see, they are under the CGST Act, and an equal amount is payable under the SGST, UT, GST Act as well. So basically, what is payable is the double of what you see in this table. Now GSTR 1, statement of outward supplies, and then there are returns, GSTR 5 for NRTP, GSTR 4 for composition taxpayer, and for the regular taxpayers GSTR 3B. Now where there are nil outward supplies in GSTR 1, or there is nil tax in GSTR 3B, 4 or 5, okay, then the late fees is 10 rupees per day and the maximum is 250 rupees. But for GSTR 5, the maximum is a higher amount of 5,000 rupees. Where the case is not as following above, that means where there are outward supplies in GSTR 1 and where the tax is not nil in GSTR 3B, 4 or 5, the daily late fees is the same at 25 rupees. For GSTR 5, the maximum is 5,000. For GSTR 4, the maximum is 1,000. And for GSTR 1 and 3B, it depends on the ATO that was in the preceding financial year. If it was up to 1.5 crore, then the maximum is 1,000. If it was more than 1.5 crore and up to 5 crore, then the maximum is 2,500. If it was more than 5 crore, then the maximum is 5,000. In respect of certain returns also, there is a late fee which has been prescribed. In case of TDS return, GSTR 7, 25 per day, maximum 1,000. For TCS statement, 100 per day, maximum 5,000. For final return in GSTR 10, 100 per day, maximum 5,000. In case of annual return in GSTR 9 or 9A, it depends on ATO in the relevant financial year. Okay, whether it is up to rupees 5 crore or more than 5 crore and up to 20 crore or more than 20 crore. In these three situations, the daily fees is 25 or 50 or 100, but the maximum is 0.02% of turnover in state or union territory, or 0.02% of turnover in state or union territory, or 0.25% of turnover in state or union territory. Finally, we come to GST practitioners, GSTP. There are certain situations or conditions which need to be satisfied for a person to be eligible to perform the work as GSTP, to be registered as GSTP. And 2 points are given here. If the person is a retired officer of CBIC or Commercial Tax Department, then he should have worked in Group B officer post or above for 2 years or more. If the person is enrolled as sales tax practitioner or TRP in the pre-GST law, that should be for 5 years or more.